On August 7th, 2018, Elon Musk sent a tweet that said, "I'm considering taking Tesla private at 420, funding secured." And within minutes, Tesla stock jumped 8%, adding billions to the company's market value, and investors scrambled to buy shares believing the deal was real. The problem was, the funding was not secured and Musk had no deal in place, and the tweet was a lie, and the Securities and Exchange Commission charged him with securities fraud because one man with one tweet had manipulated billions of dollars in stock value. This was not the first time, and it was not the last time, because Elon Musk has spent years moving markets with his words, pumping stocks he owns, crashing stocks he shorts, manipulating cryptocurrencies, and doing it all in public while regulators do almost nothing to stop him. This is the story of how one billionaire learned he could move billions with a single tweet, and how he uses that power to enrich himself while retail investors lose everything. Welcome to Paper Empires, where fortunes are built on lies. Why Musk's tweets move markets? To understand how Elon Musk manipulates stock prices, you need to understand why his tweets have so much power. Musk has over 200 million followers on Twitter now, X, and his tweets reach more people than most news organizations. And when he says something about a stock or a cryptocurrency, millions of retail investors see it instantly. Tesla is one of the most traded stocks in the world, and it is extremely volatile, which means small movements in sentiment can cause massive price swings, and Musk knows this. He also knows that his tweets are treated as official company communications, and investors take them seriously because he is the CEO, and when the CEO says something is happening, people believe it. The SEC requires public companies to disclose material information to all investors at the same time, and CEOs are not supposed to make market-moving announcements on social media without proper disclosure. Yet Musk does it constantly, and here's the key. Musk owns massive amounts of Tesla stock and options, so when the stock price goes up, he makes billions, and when it goes down, he can buy more cheap, and he has learned that he can control the price with his words. Think about this for a moment, and most CEOs are careful about what they say publicly because they fear SEC enforcement. Yet Musk has realized that the SEC is weak and the fines are small, and he can manipulate markets with almost no consequences. The funding secured lie. The biggest and most blatant manipulation was the funding secured tweet in 2018, and this is the one that finally got Musk in trouble. On August 7th, Musk tweeted, "I'm considering taking Tesla private at 420, funding secured." And he followed up with more tweets claiming he had investor support and the deal was nearly done. Taking a public company private is a massive event, and it means buying out all shareholders at a premium, and Musk was claiming he had the money lined up to do this at $420 per share. Tesla stock immediately surged, and trading was halted multiple times due to volatility, and billions of dollars in value were created in minutes. And short sellers who were betting against Tesla lost fortunes as the stock skyrocketed. The problem was, Musk had no funding secured, and he had no deal in place. And the entire thing was based on a vague conversation he had with Saudi Arabia's public investment fund, and even that conversation was not a commitment. The SEC investigated and found that Musk had lied and the tweet was false and misleading, and it was designed to hurt short sellers and pump the stock price. In September 2018, the SEC charged Musk with securities fraud, and they could have banned him from being a CEO, yet the settlement was shockingly light, and Musk paid a $20 million fine, Tesla paid $20 million, and Musk had to step down as Tesla's chairman for 3 years. He was allowed to remain CEO, and he was required to have his tweets reviewed by Tesla's lawyers before posting anything material about the company. $20 million sounds like a lot, yet Musk is worth over $200 billion. And the fine was pocket change, and the stock manipulation made him far more than $20 million in the pump. And here's the kicker. Musk ignored the settlement, and he continued tweeting about Tesla without legal review, and the SEC did nothing. Think about what this taught him, and he learned that he could commit securities fraud, get caught, pay a tiny fine, and keep doing it, because the system has no teeth. Dogecoin Manipulation. After getting away with the Tesla manipulation, Musk moved on to cryptocurrencies, and his target was Dogecoin, a joke cryptocurrency created in 2013 as a parody of Bitcoin. Dogecoin had no real use case and no serious development, and it was worth fractions of a cent, and it was a meme coin that people bought as a joke. Then Elon Musk started tweeting about it. In 2021, Musk began posting about Dogecoin constantly, calling himself the Doge Father, and posting memes and saying Dogecoin was the people's crypto, and each tweet caused the price to spike. Retail investors saw Musk pumping Dogecoin and assumed he knew something they did not, and they bought in, and the price went from less than a cent to over 70 cents, a 70 times increase in months. Musk appeared on Saturday Night Live in May 2021, and everyone expected him to pump Dogecoin during the show, and when asked what Dogecoin was, he called it a hustle, and the price immediately crashed, losing 30% of its value in minutes. Retail investors who bought at the top lost everything, and Musk walked away unscathed because cryptocurrency is not regulated the way stocks are, and the SEC has no jurisdiction over crypto pumping. But it gets worse because lawsuits later revealed that Musk and Tesla sold Dogecoin during the pump, meaning he was dumping on retail investors while telling them to buy. This is called a pump and dump, and it is one of the oldest scams in markets, and Musk did it in public with no consequences. He pumped the price, sold at the top, then crashed it with one comment on SNL, and millions of retail investors lost their savings. And Dogecoin is not the only crypto he manipulated, because he also pumped Bitcoin, announcing Tesla would accept it for payments, which caused Bitcoin to surge. Then weeks later, he announced Tesla would no longer accept Bitcoin, citing environmental concerns, and the price crashed. He bought the dip, pumped it, sold the top, and crashed it, all in public, all documented, and nothing happened to him. The Twitter poll manipulation. In November 2021, Musk sent a Twitter poll asking his followers, "Should I sell 10% of my Tesla stock?" And he said he would abide by the results. The poll got millions of votes, and 58% said yes, and Musk claimed he was following the will of the people and began selling billions of dollars worth of Tesla stock. This looked like a democratic gesture, like he was listening to his followers, yet the truth was far more calculated. Musk had stock options expiring that required him to sell shares to pay taxes, and he was going to sell anyway. Yet by framing it as a Twitter poll, he made it look like the public's decision, not his. And here is the manipulation. The Twitter poll itself moved the stock price, and announcing he was selling caused Tesla stock to drop, and he was able to sell at lower prices and buy back cheaper later. The poll was theater designed to cover up what he was already planning to do, and it gave him an excuse to crash the stock price and blame it on Twitter voters instead of his own tax obligations. SEC rules require insiders to disclose stock sales in advance through Form 4 filings, yet Musk used a Twitter poll to create uncertainty and volatility, and he profited from the confusion. Think about this. And a normal CEO would quietly file the required disclosures and sell shares in an orderly way to minimize market disruption. Yet Musk turned it into a public spectacle because volatility benefits him. When Tesla stock is volatile, he can trade around it. And his followers treat his tweets as market signals, and he exploits that. Shortseller attacks. Elon Musk hates short sellers. And short sellers are investors who bet that a stock will go down. And they borrow shares, sell them, and hope to buy them back cheaper later. Short selling is legal and serves a purpose in markets by exposing overvalued companies and fraud. Yet Musk sees short sellers as enemies because they bet against Tesla. So he attacks them publicly, and he has called them value destroyers and jerks who want Tesla to die, and he has spent years trying to hurt them. The funding secured tweet was specifically designed to trigger a short squeeze, and when Musk claimed Tesla was going private at 420, short sellers were forced to cover their positions by buying shares, which drove the price up even more, and they lost billions. Musk knew this would happen, and that was the point. And the tweet was not about taking Tesla private. It was about punishing short sellers and enriching himself in the process. He has also tweeted false information about Tesla's production numbers and delivery targets to pump the stock and hurt shorts. And when the numbers came in lower than his tweets suggested, the stock would crash. Yet by then, he had already sold. And he uses his followers as a weapon. And when he attacks short sellers publicly, his fans harass them online. And this creates a chilling effect where analysts are afraid to publish negative research on Tesla because they will be targeted. This is market manipulation through intimidation. And it works because Tesla's stock price is disconnected from fundamentals, and it trades based on Musk's cult of personality. The SEC does nothing. So why does the SEC allow this? And the answer is that the SEC is underfunded, slow, and afraid of Musk's lawyers and public backlash. After the funding secured settlement, the SEC was supposed to monitor Musk's tweets, and Tesla's lawyers were supposed to review them before posting. Yet Musk violated this repeatedly, and the SEC did nothing. He tweeted material information about Tesla's production numbers without pre-approval, and the SEC sent letters asking him to comply, yet they did not enforce the settlement. In 2019, Musk tweeted that Tesla would make 500,000 cars that year, and the number was not approved by Tesla's legal team, and it caused the stock to jump, and the SEC took no action. Why? Because taking on Musk is expensive and difficult, and he has an army of lawyers and he has a cult following that sees him as a hero, and any enforcement action is portrayed as the government attacking innovation. The SEC is also limited by resources, and they have a tiny budget compared to the size of the markets they regulate, and Musk can outspend them in court forever. And there is political pressure, because Musk is seen as a job creator and a visionary, and politicians do not want to be seen as hurting Tesla or SpaceX, and this gives him immunity. Think about what this means. And the wealthiest person in the world can openly manipulate stock prices and cryptocurrencies, get caught, pay a small fine, and continue doing it with no real consequences. The system is designed to punish small fish, yet when someone is too rich and too powerful, the rules do not apply. The retail investor victims. So who gets hurt by Musk's manipulation? And the answer is retail investors. When Musk pumps Dogecoin or Tesla stock with a tweet, millions of small investors buy in, believing he knows something they do not, and they think they are getting in early on the next big thing. Then Musk sells, or he tweets something negative, or he just stops talking about it, and the price crashes, and retail investors are left holding worthless assets. Dogecoin investors lost billions when Musk called it a hustle on SNL, and those were real people who put their savings into a meme coin because a billionaire told them it was going to the moon. Tesla retail investors buy and sell based on Musk's tweets, and they trade emotionally, and they lose money on every swing while Musk and institutional investors profit from the volatility. And the manipulation creates a casino culture where people treat investing like gambling, and they think one Musk tweet will make them rich, and they ignore fundamentals and risk management. The stock market is supposed to be about capital allocation and valuing companies based on their earnings and growth. Yet Musk has turned Tesla into a meme stock that trades on hype and manipulation, and retail investors pay the price. And Musk does not care because every time he pumps or dumps, he makes billions. and the losses are spread across millions of small investors who each lose a few $1,000s, and they have no recourse. The lesson: here is what Elon Musk's stock manipulation teaches us, and the system allows the wealthy to cheat with almost no consequences. Musk committed securities fraud with the funding secured tweet, and he paid a $20 million fine, which is nothing to him, and he kept doing it. He manipulated Dogecoin and Bitcoin, pumping and dumping on retail investors, and nothing happened, because crypto is unregulated. He uses Twitter polls and public statements to move Tesla's stock price, and he profits from the volatility while his followers lose money. The SEC is supposed to protect investors, yet they are underfunded and outmatched. And they let billionaires manipulate markets as long as the fines are paid, and the real victims are retail investors who believe Musk's tweets are genuine and who lose their savings buying assets. He is pumping before he dumps. The stock market is rigged, and not because of secret conspiracies, yet because powerful people can break the rules in public, and the penalties are so small they do not matter. Elon Musk learned that he can move billions with a tweet, and the cost of getting caught is a rounding error, and he keeps doing it because the system is designed to protect him. And until the SEC has real enforcement power and fines are large enough to hurt, the manipulation will continue, and retail investors will keep losing. If this story opened your eyes, subscribe to Paper Empires. History has the answers, and we will show you where to look.